Hey everyone, welcome back to Kitco News. I'm Jeremy Safran. Don't forget to hit the subscribe button. Well, a major development from Washington, President Donald Trump has signed a long-awaited executive order on cryptocurrency. It's titled Strengthening American Leadership in Digital Financial Technology. Now, the order establishes the creation of a working group that will advise the White House on digital asset policies. Notably, while Bitcoin wasn't mentioned directly, the executive order tasked the working group with exploring the idea of a national digital asset stockpile. Now, such a stockpile could be composed of cryptocurrencies lawfully obtained by federal law enforcement. And this is different than the proposals floated by figures like Republican Senator Cynthia Lummis of Wyoming, who suggested that the U.S. might consider using Bitcoin as a strategic reserve asset. Now, the executive order also bans central bank digital currencies. It's a big one here. And to help us break it down, what this order means for digital assets and what to expect next from Trump is Deven Soni. Deven, of course, is the CEO of Matador. He's also a seasoned investor with a background in private equity and technology investment. Deven worked at Goldman Sachs and Highland Capital Partners as a technology investor before moving into the blockchain space back in 2016. Great to have you back on the show, Deven. Nice to see you.
You're great to be here. Thank you.
Okay, we got plenty to get to. Every day is so fast-paced with some of these executive orders coming down, and I'd like to start by breaking down the one that we are currently talking about and what it'll mean for digital assets. I mean, a key feature of the order is the establishment of a presidential task force on digital asset markets, chaired by David Sachs, a special advisor on AI and cryptocurrency. Other members will include top officials like the Secretary of Treasury, Attorney General, SEC Chair, and the CFTC Chair. And many experts in the field have pointed out that it is not oversight. The working group excludes the Federal Reserve and the Federal Deposit Insurance Corporation. Under Trump's directive, the president's working group must review all prior cryptocurrency policies and submit updated recommendations within 60 days. And within 6 months, the task force is required to present a comprehensive report with proposals for a regulatory framework covering digital assets and, more importantly, stablecoins. So I want to first get your thoughts on this, Deven. Let's talk about the executive order and what stood out for you.
Well, I think the two things that stood out to me is, the timeline. Obviously, Bitcoin's been around since, 2009 and, in the popular mind since, 2014, 2015, 2016. So I think what we're going to see is more progress in the U.S. in crypto in the next 6 months than we've seen in the last 10 years, at least from a definitive stance. Historically, crypto had been kind of the realm of sort of the SEC, who'd been sort of what I call just, they really hadn't, released official guidance. So we'd kind of been sitting around waiting. A whole bunch of, serious companies have not been able to take action because there's not real regulatory clarity. So I think the biggest thing I'm seeing is just the fact that there's going to be, a lot more clarity in the space, and that's going to let people kind of build more.
Yeah. And it's, as you mentioned, Trump moving fast here. And of course, what Bitcoiners have been keeping a close eye on is the group, tasked to evaluate the feasibility of a national digital asset reserve, which would be built using cryptocurrencies legally seized by the feds, by the federal government. I mean, it doesn't go as far as many wanted in terms of creating a national Bitcoin reserve. What's your take on this? Why do you think that there was no mention of Bitcoin?
Well, I think the big part of it is, there's a whole bunch of people that need to kind of rally behind the project and the product. I'll put it this way. I feel that the strongest statement that's come out of the administration regarding this point is that, Trump doesn't see, America as the place of Bitcoin, but sort of the world leader in crypto. So what we're building a safe haven for is crypto. And I think that is the bigger theme that his, advisors and lobbyists have been pushing towards. Obviously, Bitcoin is, the number one cryptocurrency, both by market cap and mind share. But I think there's a whole bunch of innovation happening in, other areas. And I think if you think about, sort of the lobbyists in the space and the folks that are trying to push for it, it's not just Bitcoin, which is obviously a very big part of it, but, there's, tokenized securities and tokenized assets, there's stablecoins. These are all really important parts of the policy, which is why I think, maybe Bitcoin wasn't singled out just yet, but I do think it's clearly a very important part of the overall mind share.
Yeah. We've been hearing the narrative, right? So many analysts, so many people expecting that this will come out from Trump. I mean, without the mention of Bitcoin, how do you see the community responding to the executive order here, especially in the short term? I mean, the price of Bitcoin is still really stable.
Well, I think it's good enough for the Bitcoiners, right? I mean, I think we probably hit over 100K US based on some of these rumors. We're still obviously above that, and I think we are. There's a whole lot more confidence in this space, and I think what we're going to see, and to me, the most exciting part of this is the fact that the U.S. is, I feel like the stockpile at the very least is almost a foregone conclusion at this point. So now, all these other kind of countries are kind of looking around each other, being like, what should we do and what can we do? And ones that have, a little more support are probably going to be actually stockpiling and acquiring as well. So I think this is kind of the U.S. is one of the first dominoes in sort of a global kind of rush here, which I think is what the market is saying. And maybe those announcements haven't come yet, but I think they're at least being expected.
Okay. I mean, another key aspect of the order is that it bans federal agencies from promoting or issuing central bank digital currencies, aligning with the Republicans' party's longstanding opposition to CBDCs. Huge news here. Tell me what this kind of ensures here, Deven.
Well, to me, what it ensures more than anything else is that the biggest obstacle, for crypto, in the U.S. at least, has been maintaining the strength of the dollar. And I think what they're saying very clearly is that these CBDCs that are not necessarily based on a dollar, but maybe baked on a basket of goods or something else, are a lot more of a threat than Bitcoin is to the dollar. Bitcoin can be an ally where these CBDCs are not. What they're really trying to do more than anything else is establish, the U.S. dollar as, sort of this, the current global reserve currency. And by sort of backing that dollar in a sense by Bitcoin, I think that also sort of furthers the argument that Bitcoin is a really important part of this kind of ecosystem narrative. But what they don't want is sort of this arms race for CBDCs globally, where the digital dollar from 35 different countries are all competing against each other.
Yeah. Not only that, I mean, there's this, I like the word financial liberty, the fact that we're going to not have to worry about the privacy concerns about the CBDCs too. Why is this so important? I mean, explain to our viewers, because this was a big commitment that Trump just passed yesterday.
Well, I think, again, the great part about the current administration is that they're very quick acting. Things are moving very quickly. At the same time, what we're seeing is some of the things like the tariff announcements. What they're really doing in many ways, right, is promoting U.S. interests over kind of global interests, which I think is good in many ways as well. But what that's going to do is put a whole lot of pressure on countries that are sort of at odds with U.S. policies. Think China and Russia. Those folks have been, they've got the 100-year plan here to, subvert the U.S. dollar, which is kind of one of the main reasons why the U.S. has, so much sort of global authority. So I think by subverting, some of the innovation here, by not, sort of allowing it in the U.S. at the very least, what we're doing is kind of knocking off some of these innovations at the knees, and instead driving innovation towards kind of broader cryptocurrencies, digital securities, some of the things that are more kind of privatized and not as public.
Yeah, and to your point, I mean, an interesting part of the executive order was a paragraph specifying, promotion and the protection of the sovereignty of the U.S. dollar. And I think the quote here, I do have it. It says, including through actions to promote and develop the growth of lawful and legitimate dollar-backed stablecoins worldwide. So can you, give our viewers the latest on how stablecoins have been doing and also how they've been promoting the use of the U.S. dollar?
Absolutely. So I think when you think about, Tether and USDC and these products like this, right, they've historically been used, by, cryptocurrency traders for, liquidity purposes, for trading purposes. I think what we're seeing now with some of these discussions is they're going to be seen also as a store of value, similar to how real dollars and bank accounts are, right? I mean, I think this is such a market shift from 4 or 5 years ago, and anyone kind of the blockchain world knows that people were getting accounts, bank accounts shut down because you held a bunch of USDC on Coinbase or something, and now the government straight out saying that these are actually helping the dollar, not harming, the banking system, just shows that I think you're going to see a whole lot more people utilizing these assets. And the other part of that is going to say, okay, well, that means that the products built on top of stablecoins, products that generate yield, give bridges into cryptocurrency, are all going to be much more popularized and I think much more mainstream, which I think is really interesting.
Yeah, I mean, you mentioned Tether there. I mean, how might the executive order that we saw yesterday happen influence private stablecoin issues like Tether or Circle?
Well, it's so funny. Like, with Tether specifically, I think there's kind of been this, giant history of when is Tether the first domino to collapse because of the, lack of transparency. Mm-hmm. And obviously USDC and the other kind of, stable coins got created because people, for many reasons may not have trust Tether. But I think where we are today is that, when you see capital inflows, these companies make tremendous amounts of money. And I think when you've seen, with Tether specifically, has been sort of this kind of DeFi reserve currency in many ways. So I believe that, they're in a very, very strong position if they choose to sort of play ball. And that's kind of a question that, I think that company has to answer on their own, which is, do we want to sort of stay outside of the sort of this like regulated ecosystem and maybe have different rules about how we invest our capital? Or do we stay outside and, kind of run business as usual? I think that'll be a really, really interesting question we see in the coming months.
Right. Yeah, no, it'll be fascinating to watch that. I mean, another big development was Senator Cynthia Lummis getting confirmed as first ever chair of a new Senate panel on digital assets. I mean, she's been the leading proponent of creating a U.S. strategic Bitcoin reserve, even proposing to sell the gold that the U.S. owns for Bitcoin. I want to talk to you a little bit about this. I mean, what impact do you see her having in this new role?
Well, I think she has a whole lot of people's ear at this point, and the fact that this role has kind of legitimatized a lot of her kind of pushing over the last, several years. I think the broader theme here is that the folks being put into positions of authority around setting policy have almost exclusively been folks that are pro-Bitcoin, whether that's David Sachs, whether that's Hester Pierce, and whether that's Cynthia Lummis. Like, I think all these folks are in the right position here. And who's on the outs? Well, it's the Treasury and the Fed, which have been, historically the biggest sort of blockers of any sort of innovation in the space. So I think what we're going to see is something really, really friendly. Obviously you've always got politicians that, sort of push the agenda further than the U.S. Government like is going to take it. And I think in some cases, I don't necessarily see the U.S. selling a bunch of gold here, but I do think that the sentiment of Bitcoin being a digital gold proxy and being treated the same way is quite interesting.
Another piece of breaking news for the cryptocurrency industry is the Securities and Exchange Commission rescinding a key roadblock that kept banks from offering crypto services. The SEC has officially repealed the controversial Staff Accounting Bulletin 121, which had effectively restricted traditional financial institutions from getting into digital assets. The new directive, announced through Staff Account Bulletin 122, explicitly withdraws the earlier guidance that forced banks to include crypto holdings on their balance sheets. I want to get your comment on why the crypto industry has been waiting for this and why it is so significant that this was signed or repealed, I suppose.
Absolutely. I mean, I feel like that, having, myself at least been in the blockchain world for, nearly a decade at this point, you would not, could not believe how much of a pain this concept of custody for crypto has been, and what do auditors accept? What do financial institutions accept? And audit, things like this. So when we think about 122, which is repealing the fact that custodians now have to treat crypto on their balance sheet like a liability that can kind of go to zero, I think what this shows is that a whole host of people that have been custodians for dollars and securities and other commodities can now onboard clients onto crypto without having a major adverse risk to their balance sheet and their sort of their credit rating. So I think what this is going to do is have crypto custodians, crypto as a balance sheet companies all flourish much more significantly because you've really taken what I'd call as the biggest hurdle, right? What used to have is that now every dollar of upside you had in crypto just came with a dollar of downside as a liability. Now, not having that repealed rather just means that people that are bullish on crypto as an asset class can do so in the same manner they hold dollars or other marketable securities.
How crazy is the timing of all of these changes taking place? I mean, it doesn't look like it's a sell the news type of event. It's just more upside for the space.
Um, Absolutely. Well, I mean, I think if you were, sitting here betting on a 3x Bitcoin increase
Yeah.
because the U.S. is going to announce that they're buying, a million Bitcoin, um, sure. But I think what you're seeing is every, sort of direction is sort of up and to the right. It might not be sort of the like up and to the right this way, but I think what we're seeing is, a whole lot of, dams being broken with regards to kind of these things that would people thought would never happen are happening in really, really quick succession. So I think there's a whole lot more, sort of like, rumor and happening in the positive direction than the negative. Like I don't think I
Yeah.
heard, sort of one negative sentiment come out of, kind of Washington over the past, couple of weeks.
Yeah, the industry is certainly maturing quickly. Another word that's gaining more and more attention in 2025 is tokenization. The head of the world's largest asset manager is calling for swift regulatory approval of tokenized assets. Larry Fink, BlackRock's CEO, has urged the SEC to move quickly on greenlighting the tokenization of bonds and even stocks. In an exclusive interview with CNBC, Fink reiterated his belief in crypto's potential and highlighted tokenization. Let's take a quick listen here.
As a huge believer of crypto and blockchain and tokenization, I want the SEC to rapidly approve the tokenization of bonds and stocks.
Yeah, Deven, big one here, especially coming out of Larry Fink's mouth. Talk to me about tokenization and talk to us about this trend.
Absolutely. Well, I think, the maybe to take half a step back on the why around tokenization. Um, what we've seen with crypto and digital assets and blockchains has been, the two main benefits have been, reducing costs and increasing speed and increasing sort of trackability and verifiability. So these are all things that obviously work great with ledgers, but I think when you think about securities and things like that, historically, and especially since kind of the last couple of years in Sarbanes-Oxley, it's been really, really, really hard for assets to get liquidity. And the costs have been increasingly high, the timeline's been increasingly high, and I think the opportunity for digital assets to create liquidity in markets that have not been liquid before is extremely powerful. And when you're talking about BlackRock and Larry Fink, I think what they're saying is, hey, we've got a whole bunch of financial products. We've got hedge funds, we've got real estate funds, we've got real estate, we've got bonds, like all these products, and liquidity increases valuations. Mm-hmm. And if we're able to use blockchains and tokenized securities to streamline the path to liquidity, we're going to see a whole lot more products get created in the market for institutional investors and retail investors. So I think that's why this is so exciting. And I think the fact that, BlackRock has been, early innovators in the space, even before the regulatory frameworks were kind of well defined. And what we see is a whole bunch of people, trillions of dollars on the sidelines, waiting for these sort of regulatory clarities, because you don't want to pay the legal fees and you don't want to take the risk if you don't know if you're going to succeed. So now that you know you're going to succeed, you're going to see a whole lot of stuff on the sidelines that used to not, kind of be waiting for liquidity and waiting for, tokens and things like that to really kind of come to the forefront.
So it's not just Wall Street benefiting from this, right? There used to be a little bit of a flex in the industry where it's like, we can keep them out. I mean, who stands to gain from this?
Well, I think it's asset owners and asset creators stand to gain the most, because when you have a liquid market for something, the valuations just go up, right? The liquidity premium goes down. So, think about any product that's been innovated in the last couple of decades, right? Venture capital through the Jobs Act and crowdfunding, or peer-to-peer lending, consumer loans. All these things that are currently consumer to enterprise now have the ability to become consumer to consumer, which again I think creates more financial inclusion for consumers, not just financial institutions. So I think you're going to see a lot more financial products that are kind of custom built, right? I think you're, not to go on too much of a tangent, but, lots of talk about, the insurance industry these days because of, kind of the weather patterns and things like that. Well, this could be something that sorts that out as well, because now consumers can, self-insure their own homes using tokens and things like that, right? So obviously a whole lot of products can be created once a stable framework of legality and technology is kind of built.
Yeah, fascinating to watch. Okay, well, on the other side of alternative assets, we have gold, of course, a hard asset, trading at around 3-month highs, basically approaching record levels here. I mean, at the time of filming, I think we're spots trading around 27.70. So let's talk about what's driving gold higher here. I mean, it's been quite fascinating to watch the resilience of it this year.
Absolutely. Well, I think that what this is showing more than anything else is people really do believe that the tariffs that have been kind of promised during this election cycle are coming. I think nearly historically every time you've seen a global tariff, whether that's electronics from Japan, or whether that's steel, or whether that's sort of precious metals, like all these things increase pricing, increase inflation, and that's where gold is kind of reacting. And I think historically, the vast majority of times you've seen tariffs announced, you've had 5 to 10% increases in precious metals prices. I think here you're seeing and you're going to see a lot more of that. But I think that's because just the nature of these tariffs are not, hey, we're targeting one small sector for some political reason. I think it's just a broad-based approach to saying, we want America first, and that's going to mean that people are going to be paying a lot more for everything. And frankly, you can't change that supply chain very quickly, so you're going to see a whole lot more price increases, and that's what we're seeing with gold. It's just people just expecting that.
Yeah, I mean, all year last year, I was talking about record highs on the gold front. It could reach another record high. I mean, is it going to be policy? Is it going to be rates? Is it going to be, debt, tariffs? What do you think? What's going to take gold to a new record high this year?
Well, I think it's going to be inflation and more than anything else. And I feel like the tax impacts, the offsets here from the taxation changes are not going to offset the increase in tariffs, right? And I think you're seeing these near immediate tariffs in Mexico and in Canada. You're seeing increased tariffs in China. And I think when you think about the global supply chain, prices are going up, and that's inflation. And that's kind of the number one, reason people flock to, assets like gold. And it's going to be the number one reason gold goes up.
Yeah, Deven, let's switch over here. I mean, your company, Matador Technologies, is a leader in the Bitcoin ecosystem. I know that you went public last year on the TSX venture. I mean, how's it been? What projects are you focusing on right now?
No, absolutely. Well, it's been amazing because, two parts of building a product like Matador, and Matador is building a digital gold product on top of the Bitcoin blockchain that lets users hold gold in their digital wallets, like the same way they hold Bitcoin. So I think the really interesting part of this is that the technology is buildable, it's readily available, but the regulatory landscape has been the biggest bottleneck to innovation in the space. And as we get clarity in the coming weeks and months, I think the types of products that companies like us are going to be building are going to be much more innovative, much more sort of distributed. And I think you're going to see a lot more users, right? Like when people have pure certainty that what you're buying and what you're selling has a legal basis, has liquidity, that's what's going to drive the industry. And I think that's what these regulations are showing. Not to mention the fact that people think gold's going up and Bitcoin's going up. It's great for people that sort of work in gold and Bitcoin.
Yeah. No, that makes sense. I mean, we're talking about this regulatory clarity that's coming in fast in the U.S. I mean, it gives you a little bit of a smoother runway, obviously. How big is this going to be for you, getting this type of regulated clarity?
Well, I think if you think about, what we talked about earlier, which is Tether, right? You've got, $140 billion of Tether floating out there. You've got, $50 billion of USDC out there today. And I think those numbers are going to go up. And you compare that to the, $1 or $2 billion today of, digital precious metals and digital gold. I feel like that there's going to be sort of a catch-up period over a period of time where people that are holding these types of assets are going to, basically be moving towards digital representations of gold and silver and other assets. So we think that there's a very, very big opportunity for, multiple $billion to get created here of these types of assets like the ones that Matador creates.
Yeah, and a much bigger audience, as you mentioned. Deven Soni is the CEO of Matador Technologies. Thanks for joining us today, Deven. It's big news for the industry here.
No, absolutely. Excited to be here.
Appreciate it. I'm Jeremy Saffin for all of us here at Kitco News. Thank you for watching. Don't forget to hit the subscribe button. We've got some great content coming up all week long. We'll see you next time.